6 of the best AI ETFs to buy for 2025. Investing in artificial intelligence stocks via an ETF can provide growth with greater diversification. There are only a few dedicated artificial intelligence stocks per se. Instead, the AI theme is best understood as a mix of different players across the technology sector. One obvious component is semiconductor companies, the chip makers that design and manufacture the advanced processors needed for AI applications. Familiar names in this space include NVIDIA Corp., ticker NVDA, and Advanced Micro Devices Inc., AMD. These companies supply the hardware powering the software firms at the forefront of AI development, such as Microsoft Corp., MSFT, through its partnership with OpenAI and Amazon.com Inc., AMZN, with its stake in Anthropic. The AI ecosystem also includes technology-adjacent companies deploying AI solutions to tackle automation challenges. A prime example is Intuitive Surgical Inc., ISRG, which uses AI to enhance the precision and efficiency of its robotic surgical systems. If you're looking to capture all 3 AI sub-themes, hardware, software, and applications, along with other adjacent areas like cloud computing and data centers, a thematic exchange-traded fund, ETF, could be the ideal approach. Thematic ETFs are built either through rules-based indexes or active management, providing diversified access to the AI megatrend. We're in the early stages of the AI cycle, and proper diversification is extremely important, be it across company stages or geographies, because it's difficult to pick a winner or two this early, says Tejas Desai, Director of Thematic Research at Global X ETFs. With a thematic ETF, you're following an idea as opposed to a complex strategy. Here are 6 of the best AI ETFs to buy now. Trackers, Artificial Intelligence and Big Data, ETF ticker XAIC. Many of the existing funds in the market utilize backward-looking mechanisms to determine if a company should be classified as an AI company, says Arnie Nowak, Regional Investment Head of X-Trackers, Americas, at DWS Group. On the other hand, XAIC's approach seeks to be forward-looking, as its underlying index screens for approved patents in fields related to AI. XAIC tracks the Nasdaq Global Artificial Intelligence and Big Data Index. This benchmark screens companies based on patents filed for machine learning, image and speech recognition, and natural language processing. Top holdings include Apple Inc., AAPL, Salesforce.com Inc., CRM, and Meta Platforms Inc. XAIC charges a 0.35% expense ratio, the cheapest on this list. Roundhill Generative AI and Technology ETF, ticker CHAT. CHAT selects stocks using a proprietary methodology that combines a transcript score and sector score to evaluate companies' relevance to generative AI, factoring in their revenue, profit, and R&D investment in AI technologies, explains Dave Mazza, CEO at Roundhill Investments. Companies are then scored and selected based on their exposure to AI, market capitalization, and liquidity. CHAT's actively managed strategy means that the ETF does not passively track a benchmark index. As a result, the ETF has broader discretion with its investment decisions and portfolio management. Right now, 4 of the Magnificent 7 stocks sit in the ETF's top 10 holdings: NVIDIA, Alphabet Inc., Google, Microsoft, and Meta Platforms. The ETF charges a 0.75% expense ratio. Global X Artificial Intelligence and Technology ETF, ticker AIQ. AIQ offers comprehensive exposure to the entire AI value chain, with exposure that ends up looking quite like the Nasdaq 100 but is more tilted toward technology and mid-cap growth, Desai says. The ETF currently has 27% of its holdings overlapping with the Nasdaq 100, sharing 24 common holdings. But unlike the Nasdaq 100, AIQ does not hold companies like Costco Wholesale Corp., Cost and PepsiCo Inc. or PEP. Global X Robotics and Artificial Intelligence ETF, ticker symbol BOTS. We see BOTS as a more niche play on applied automation, Desai says. This ETF tracks the Global Robotics and Artificial Intelligence Thematic Index, which emphasizes hardware over software. Compared to AIQ, BOTS has a lower 46.8% allocation toward technology stocks. In exchange, it has a higher 32.9% and 15.3% allocation toward industrials and healthcare, respectively. Currently, the top holding in BOTS is NVIDIA, at a 13% allocation. The next largest holding is Intuitive Surgical at 10.5%. The other top holdings in BOTS comprise a mixture of Japanese and Swiss manufacturing companies making it more globally diversified than AIQ. The ETF also charges a 0.68% expense ratio and currently has just over $2.6 billion in assets under management. Invesco AI and Next Gen Software ETF, ticker symbol IGPT. We believe the AI trend will broaden in scope to encompass additional segments of the market, with new technological advancements, a more stable interest rate environment, and the ongoing impact of fiscal stimulus broadening innovation across multiple industries, says Renee Reyna, head of thematic and specialty product ETF strategy at Invesco. For AI exposure, Invesco offers IGPT at a 0.58% expense ratio. This ETF tracks the Stocks World AC Next Gen Software Development Index. The index targets 100 companies from across the globe that generate revenue from various forms of software and AI, such as data storage, robotics, autonomous vehicles, semiconductors, and web platforms, Reyna says. Over the trailing 10-year period, IGPT has delivered a strong 14.4% annualized total return. The iShares lineup currently has 445 US-listed ETFs. While many of these ETFs offer exposure to technology, the dedicated AI thematic ETF among them is ARTI. This ETF tracks the Morningstar Global Artificial Intelligence Select Index, which holds a portfolio of 50 companies involved in generative AI, AI data and infrastructure, AI software and AI services. Aside from XAIX, ARTI is also cheaper than the previous AI ETFs, with a 0.47% expense ratio. Don't rely on past performance to judge this ETF, though. Prior to August 12th, ARTI tracked a different benchmark, the NYSE FactSet Global Robotics and Artificial Intelligence Index. This index had a vastly different composition due to its equal weighting methodology. If you enjoyed this video and want more top dividend stock ideas, smash that like button, subscribe, and dive into this next video. It's packed with tips to grow your income even faster.